Welcome to Target Market Insights, the multifamily and marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Sorry, I wanted to make this bigger and it reacted very slowly, and that was huge. No more. All right, there we go. All right, 3, 2, 1. Welcome to Target Market Insights, the multifamily and marketing show. I'm your host, John Kasman, and I want to thank you for joining us for another great episode. Now, if you haven't done so already, be sure to hit that subscribe button so you don't miss an episode, and leave us a rating and review so we can learn more about what you love about the show and also how we can make it work harder for you. Today, we got a good one. We're going to be talking to David Toupin. David Toupin is the owner of Toupin Holdings, bringing 6+ years of multifamily and commercial real estate investing experience. Now, he has acquired over 1,200 apartments as the key principal, valued at over $100 million. Now, he is also the CEO of Real Estate Lab, a multifamily real estate software company focused on managing the acquisitions and analysis process for multifamily investors. Let's welcome to the show, David Toupin.
What's up, man? How you doing?
David, I'm doing great. I went over your bio at a high level. Take a minute or two and give us a little bit more context.
Yeah, so man, multifamily real estate is all that I do. So it's cool that that's what your show's about. It's all I've been doing since I was 19 years old. I started when I was in college. I had done some kind of corporate finance internships, and I learned a lot about the finance side of things, right? And I spent the whole 80 hours a week working in Excel type of deal. And it really wasn't for me, but I knew I wanted to get into real estate. I listened to some podcasts early on, back in 2015, 2016. I read Rich Dad, Poor Dad, and I was just absolutely hooked. I think like a lot of people, I figured that I had to start in single family, which I quickly found out wasn't the case. So I did that for like a couple months. I wholesaled a couple properties, made like a few bucks here and there. But anyone out there who's ever read The Art of the Deal, Donald Trump starts out by saying, I like to do deals, big deals. And I've always felt the same, mindset wise. I've always wanted to do bigger deals, bigger projects. And so single family didn't really do it for me. So right away, I started figuring out how do I get into buying apartments? The biggest thing is understanding the numbers and how do you figure out what price to pay and how to make an educated offer and how to talk to brokers and sellers and whatnot. So I just kind of took on that process, and I spent 16 hours a day for years, just learning that process and really just dialing in my skill set in the multifamily space. And so, pretty quickly, I think within 6 months, I was under contract on a 12 unit. And then a week later, I went under contract on a second 12 unit, and I didn't know how to buy either of them. I didn't have the money to buy either of them. I didn't know what bank I was going to roll with. And so it's just one of those things where you get yourself head first and then you figure it out later. And I ended up scraping together a couple $100,000 from some investors, a bank. I lined a bank up for both of the deals. It was the same bank, and self-managed them and went and bought them and raised the rents, did some work to them. And that was my first foray into investing. So a couple years later, fast forward, I've done anything from those 12 units up to 200+ unit properties. I do syndications. Mostly today I do joint ventures with more of my own capital and some partners of mine. And so, I've flipped a lot of apartments, syndicated quite a few, and self-managed some. And now I started a software company. So it's a little bit about what I do.
Man, I love it. You talk about being 19 years old, getting into the industry, learning everything you could, spending 16 hours a day just crafting that skill set and getting better and better. Ultimately get into those 2 12-unit deals that got you going. And here you are with experience doing over $100 million worth of real estate. So let's unpack that a little bit there, right? You talked about really getting better at underwriting. And, one of the things that I know about you when I first started hearing your name was people talking about underwriting, and just the skills you had as an underwriter. Talk to us a little bit more about what it took to really hone that skill, and how did you learn to kind of merchandise that or share that with other people to help them get better at underwriting?
Sure. Well, I think the first thing you'll notice, you try and get into the apartment industry, you'll get deals thrown at you, and it's like, okay, I want 2.6 million for this 18 unit property in X location, and the rents are 950 currently, and we think you can get them from here to here. And it's like, man, that's a lot of information, right? Like, how do I figure out, is 2.6 million actually the right price, or should it be 2.1, or are they actually crazy? Should it be 1.5, right? So you really have to understand that in apartments, it's not like single family where I'm just comping out a deal like, hey, here's another two bath, and I need to, here's my ARV, this and that. I mean, it's a little bit more complex when it comes to calculating your net operating income, and taking into account rent bumps on a specific number of units, this and that, different types of financing. So I just started by throwing it all in a spreadsheet, and I was like, hey, this property makes this much. Here's my expenses. Here's my net. Here's where I think I can get my income. Here's where I think my expenses will be. Here's my debt is going to be. And this is my net income after that. Here's my cash flow. And really the big variable is, what price do you pay for the property? Because that affects your down payment, which affects your cash on cash, which affects the amount of debt you have, right? Your debt payments. And so all that kind of comes in together into this whole equation of what's my ROI. And so I figured out a way to package that all in an Excel spreadsheet, a deal analyzer, whatever you want to call it, underwriting model. And it worked well, and it made it really easy for me to plug and play. Like I was underwriting 3 to 5 deals a day, like crazy, hundreds of deals. And so I just got really good at it, and it allowed me to quickly get back in touch with brokers, being like, well, I don't know if this is going to work at your price. I think I need to be at 2.1, not 2.4. And, the utility costs are kind of high. I don't think I'm going to be able to get the rent bumps that you think you're saying, this and that. So I could come back to them with educated responses. And so, anyways, long story short, people started asking me, can I use your model? Can I buy your model from you? This, that, and the other. And I put it up on my website after a couple of people paid me like, $100, $200. So I put it up on my website for $250. And a year and a half later, I'd sold over $100,000 of a spreadsheet.
Wow.
I'm like, wow. I'm like, dude, there's a market for this. And I have a free one that thousands of people have downloaded. And so I'm like, man, there are just a lot of people that are looking for some kind of tool that makes it easy for them to buy apartments. And so I figured that, nowadays I've started a software company because I knew that Excel can't do everything, right? There's a lot of other things that come to managing a pipeline of a lot of deals, looking at a lot of deals, making offers. And so I created Real Estate Lab, which is a software company, and we focus on the whole acquisition side, from finding a deal, managing your pipeline of deals. You can create LOIs and send LOIs straight through the software. You can underwrite deals right in the software. It'll read rent rolls and T12s, take the data, put it directly into the analyzer for you, all that kind of stuff. So it's kind of an all-in-one acquisitions platform.
No, I love it, man. We're going to talk a little bit more about Real Estate Lab in a second, but I want to go back to what you said about, being able to create this underwriting model, this deal analyzer, sharing it with a couple people, having a couple people pay you for it, which is always a great way to prove your concept, right? And a couple people paid you for it. You decided to put it on your website for $250. A year later, you've made over $100,000 at that time, just through this deal analyzer. I want to talk about that because, underwriting a deal is so important, right? And the inputs are so important, understanding the market research. And when you think about being able to dissect the information, and, I'm sure you've gotten feedback from a lot of those different people, where do you think most people have a problem or struggle when it comes to underwriting deals?
Yeah, I think it's like formulating a plan. It's like, okay, I have all these numbers, but what do I do with it? Right? How do I figure out what's the best way to package all this and create a plan going forward? So I think most models, maybe more do nowadays, but back then they didn't really have a way to create like an all-inclusive plan. And so what I did that I think makes it really easy is you can add in what you think your rents will be for units that you're not planning to renovate versus units that you plan to renovate. And then you could select how many of that unit mix you want to renovate, how much you're going to spend per unit type. So then it kind of creates this going forward the number is called gross potential rent, right? What's our gross potential that we can hit? And then it allows you to easily kind of scale up towards that income over the course of a couple of years. So, you don't have to do all the manual calculations yourself. You're just plugging and playing. It's like you put numbers in the blue cells and you don't touch anything else. I make it super simple. It's all color coded, very easy for people to read. Basically, you're going to look at the rent roll in the T12 and it tells you a couple numbers to plug in. And then the rest of it, you kind of have to do a little bit of research, right? Like, what are your rents going to be? How many units do you want to renovate? Anything else on the property you need to put money into in terms of CapEx and improvements and, deferred maintenance. And then from there, really, it's just picking your financing structure. It's pretty easy inside there to say like, hey, I'm going to buy this with this financing structure with either a regular loan or a bridge loan. And then I want to refinance in year 3 and sell in year 7. And it'll take all that data you've put in and just with a couple clicks of a button, it'll spit out, here's what your ROI is going to be at the end of the day. So, I think that's the tough part for people is kind of formulating that plan. But the biggest thing is it takes practice. You need to understand how to read the numbers. You need to know what like a P&L looks like and looking at a 10-year pro forma. What am I supposed to be looking for? You're supposed to be looking at, is your NOI growing, right? Look at your cap rate, going forward relative to the original purchase price. Are you buying it at a 6 cap and then increasing that NOI so that now you're at a 9 cap, right? Then you can sell it at a 6 still. And that's how you make that spread of equity. So, I think it just takes practice to get there and understand all these little key metrics, but it's important to practice.
Listen, and underwriting is so key. And it's one of those things that, it takes time to get better at that. How much time did it take you? I mean, you mentioned 16 hours a day is what you were kind of investing in this process, but like, how long would it take you to underwrite a deal starting out versus now, if you had a deal, how long does it take you to underwrite?
I would spend, when I first started, I would spend sometimes on early deals, like 6, 7, 8 hours, like just going back and forth, like maybe not all at once, but in a couple of chunks of time, just like throwing numbers in, figuring it out, this and that. And like, oh, I just talked to the broker again. I got this info, or I did some more research and I think I could do, nowadays I'll spend less than an hour, but I used to spend just hours and hours on even one deal just because I really wanted to figure it out and learn it. And that's what made it easy. Nowadays is that time.
I think what's interesting is you say you went from 6 to 8 hours down to 1 hour. So huge time savings, but it's still not a quick 5-minute thing. And, for those folks who are looking for that quick, immediate solution, share a little bit more about why it still takes you an hour to write a deal as opposed to 5 minutes.
Yeah, I mean, you can easily go, and anyone could, right? And I could say, well, this 16 unit building, the average rents are $800, right? So I could wait and do 16 times 800 times 12 months in a year. 153,000 is our, potential gross income. Let's take off 10% for vacancy. That gets us to 138. And then let's take off 50% for expenses. And that gives us a 70,000 NOI. If I divide that by like a 6.5 cap rate, that building's $1,070,000 would be a fair offer at a 6.5 cap rate. If that's what I think is fair. But there's all these other equations. Now, what happens if I want to bump the rents? Take into account that doesn't start from day one. Take into account how much now in renovation dollars am I going to have to put in? What's my loan going to look like from a bank? All that stuff. What's my interest rate? Is it interest only? Is it not interest only? I mean, there's a lot of factors that come into play that you really don't do just off the calculator. And you can give yourself a pretty quick and dirty, back to the napkin analysis of a property. But when I actually go in and I'm making an offer on a multi-million-dollar property, I need to have a plan fit to support a multi-million-dollar purchase, because not only am I putting my own money, but I'm putting a lot of investors' money. And it's really important to have, a solid plan to back that decision that I'm making. So, it definitely takes a well-structured plan financially.
Yeah, I mean, listen, that's great insight. It's the inputs are only as good as the person and the logic behind it. You can assume whatever rents you want or assume whatever expenses you want, but if you haven't validated that, if you haven't confirmed that this is what you can get in the market, understanding what expenses may change, it's going to be very difficult to get an accurate portrayal of what the results should be. So making sure you take the
100%.
time to really understand what the inputs are, the information, and that takes time. I mean, you can't just, like you said, in 3 minutes, you could probably go look at the income, 50% expense ratio, 10% for all your economic losses, and boom, you've got an NOI. But there's so much else to do and to factor in. It just takes more time. So I know a lot of people want that quick, easy way to plow through a bunch of deals, but you're going to be missing out on where the opportunities are if you don't factor in the upside and what your business plan is going to be for those properties.
Yeah. And with that said, I think the goal is to do it in as little time as possible, always, right? So it's like, it may not take 5 minutes, but we want to avoid you having to take 2 hours. So that's why I created the software, because now you can upload a rent roll. It reads the unit mix and it puts it right into the analyzer for you. You don't have to go and count the rent roll and count what the average rents are right now. You just upload it and boom, it puts it in there for you. Same with the T12. It'll put the T12 numbers right in there for you. If you upload it in Excel, it'll read it. You go through a little wizard, boom, it puts it right in there now. And then that takes, 20 minutes of the time you'd normally spend having to read through those documents. It points all that stuff out for you. So, and the goal eventually is to have rent comps and operating expense comps. I mean, once I have so many thousands of T12s uploaded into the software, I can start providing people data like, hey, I see you're, analyzing a C-class deal in Atlanta. Well, based on the data that we have, we suggest you use this set of operating expenses. Here's the typical contract services per unit and typical utilities. Here's how property taxes will be reassessed for you in this state. And you just press a button and my software puts all that information into the analyzer for you. Like I'm working towards that stage. So it's really automated.
Yeah. What led you to lead and kind of build out the software as opposed to just, working through the Excel model that you had previously?
There's just so much that Excel can't do. I mean, Excel can only do as much as we input into it. But if I can incorporate market data, along with creating an attractive product that people can use in their daily business as a multifamily investment, company or an individual that's investing in deals, like if I can help you manage all the deals you're looking at. I mean, our home screen, our dashboard is a map, and you have a pin for all the properties you're looking at, and it's color coded. Like green are your active deals, gray are the old dead deals, blue are deals you have under contract, et cetera. And so I can easily go around and look at, for example, for me or other companies that are looking at a lot of deals, we're looking at, 5-10 different deals a week. This has got to be a good way to organize that better than just a Dropbox or whatever, a Google Drive. So it incorporates a lot of other stuff in there on top of the analysis part of the process.
All right. So Real Estate Labs, I think the website is realestatelab.com is where people could go. Lab with no S, right?
No S, correct.
No S, realestatelab.com. You can go check that out there. What makes Real Estate Lab a unique platform versus anything else that's out there in the market today?
Yeah, well, there is nothing like it out there. I mean, I've looked, and I have a CMO and a marketing team, and we do so much research into like competitive analysis and stuff. There's just no product out there that really hits the sweet spot that we hit. We're not so institutional that you need to be a private equity firm to understand how to use what we're using. You don't need to have been an investment banker to be able to use the software. It's very modern and user friendly. It's got a good UI. So it's good for people that I think are in either from just getting started all the way to you are syndicating, thousands of apartments, right? And anywhere in between. So I think that's one good thing. And then it's just unique. It's something that nobody's really done before, I don't think, in the market. Like you can go out and buy a spreadsheet, but we're trying to create that system to help you acquire more properties and cheaper than what a couple other people that provide a portion of our services. I mean, there's a couple companies out there that do like rent roll and T12 parsing. I mean, we're going to have that as like a side feature of our software for 1/5 of the price that they charge just for that feature in their software. So yeah, I'm just trying to make it cheap and affordable for people that want to get the game to be able to buy more apartments and be able to trust the plans that they're putting together and the data that they're using is solid.
What is the price range for kind of the software?
It's probably going to start out around $100 a month. We're releasing it. It's in a closed beta group right now, and it's being released by the end of 21. And it'll probably start out in between 100 to 150 a month.
All right. So for folks who want to learn more, they can go to realestatelab.com.
Yep.
and learn more about the software, everything that you can do there. I'm sure that you can do a dry run or get in touch with the team. But I mean, it's great because technology is evolving to the point where, as you mentioned, right? Before all you had was an Excel spreadsheet. I mean, that was the only thing people used to evaluate multi-million-dollar deals. And I mean, you can talk to some old school investors and they just still use a piece of paper, a napkin, and a pen, right? And they'll just sit there and jot down a couple numbers. Oh, that's a good number. Let's go. And it's crazy that, you're making multi-million-dollar decisions with technology that, quite frankly, is dated. So to your point, there's only so much Excel can do. The next step is to be able to, really leverage technology, streamline some of these processes, take in all that information and help to make sense of it so you can be a more informed investor and make better investing decisions. With that said, I imagine that you've come across a bunch of different people and have had some great stories of success from utilizing your tool, but also just in general as far as things that they've caught during their process. But also people maybe just miss something completely. Give me like the best and the worst stories you've heard when it comes to underwriting.
Well, I think the biggest thing that most people forget is the property taxes. And dude, I've done it, man. The third property I bought, the taxes were like $90,000 a year. It's a 96 unit. The tax were like $90,000 a year. And when I bought it, I anticipated in my model that taxes would go up like 10%. I'm like, well, taxes normally go up 3 to 5% a year. So I'll put 10% to be safe. So I had like 100,000 was my budgeted number. And then I get the first tax bill and it goes up to 144,000. So I'm 44K under, which if you look on the, an NOI basis, $44,000 at a 6 cap is 700K. I'm 700K off, man. And so, we ended up doing really on the property overall, but I didn't understand how that worked. And so I think that's one of the biggest things. Every state does it different. Every county does it different. There's different tax rates, right? But a lot of times when you buy a property, your property gets reassessed. And the following year, your taxes will go up, and there's no limit to what they can go up to. They get uncapped in a lot of states like Texas, Michigan, Indiana, other states I invest in, Georgia as well. And when they uncap, I mean, there's no telling how high they could go. It's normally an equation based on the new purchase price and what the new assessed value is and property tax millage rate. Right. And so you can calculate it pretty easily if but if you don't, it could easily double or go up 50%, 30%,
Yeah, that's a big one, man. And a lot of people make that mistake, and it's a tough one. So hopefully you understand that nugget. I mean, that's a gem that you just got from David. Make sure you understand how your property is going to be reassessed. That is critical if you are going to be a successful investor. David, they can go to realestatelab.com to learn more about how to leverage the software, the technology to become a better investor. And do you still have that the underwriting model available on your website?
I do. Yeah. You could still buy it comes with the software too, but you can still just stand alone buy that as well.
All right. So if you want to check that out, what's the website? Say it again.
Realestatelab.com. Yeah.
Realestatelab.com. All right. Excellent. So check that out there. David, we're going to move on to our bullseye round. You ready?
Dope. Yeah, I'm ready, man.
Give me a failure or an apparent failure that set you up for later success.
Oh, man. I don't know. I think the biggest thing is I wish I had bought more properties. I think there were so many properties that I was maybe overly conservative on just because I was new. And I feel like going back, I should have bought them all. Hindsight's always, 30-30. But yeah, I think the biggest thing is like just trust your gut and go in with realistic expectations and be a little bit conservative, but don't throw a deal over 50 grand. If it's a good deal, if you're talking multi-million-dollar deals, don't throw a deal over 50 grand or 100 grand. All those deals I probably would have made a ton on if I had done, but it is what it is. Sometimes the best deals are the deals.
Digital or mobile resource you recommend for your business?
Yeah, I would say Instagram. Instagram's been really good for my business.
Absolutely. Instagram. Excellent. Give me the book you've recommended or gifted the most in the last year.
Oh, man. Never Split the Difference.
What's a daily habit that helps you stay focused on your goals?
I don't set any calls or appointments before noon.
What are you curious about right now?
how to completely disrupt the industry.
What's one thing you know now that you wish you knew when you were starting out?
How to negotiate.
All right, we've talked about where you live a little bit offline. I know you're down in Austin, Texas. Give me the best place to grab a bite to eat in Austin.
Oh man, Terry Black's barbecue. It's so good.
All right, Terry Black's. We'll have to put that on the list the next time we come down to Austin. All right, again, for folks who want to reach out, we have your website, realestatelab.com. Is there any other way to reach out to you or to get in touch?
Yeah, Instagram at Real Estate Jedi. That's the best way.
Awesome. We'll make sure we put a link to that in our show notes. David, great talking to you today. I enjoy you sharing really just how you spend so much time underwriting deals. We didn't talk about it, which is really amazing, but you started at 19. You're a young guy now, so you've been doing this really throughout your early 20s and building this up when a lot of people are trying to figure out what it is they want to do in life. You're here, building out different platforms and softwares, and you've got $100 million in real estate that you've done. So just amazing growth and success that you've had at such a young age. Any tips or advice for someone else who maybe is a little younger, maybe in your shoes, trying to figure out how to get started, but maybe they feel like, hey, maybe I need to wait a little bit?
Yeah. Some of the best advice I ever got was the biggest companies in the world and some of the wealthiest people, wealthiest individuals, they got good at one thing, they stuck to it, and they scaled it. You'll never grow a successful business by doing 10 different things, 5 different things, 3 different things. Pick one thing, get really good at it, and go all in.
Love it. Great stuff there. David, thank you for coming on Target Market Insights. I hope you have a great day, and we'll talk again soon.
Thanks, man. I appreciate it.